All right. So, everyone, if you're interested in oil and oil-related assets, you're in the right spot. Kirk Spano's with us. So a lot of interest in oil with what's happening in Venezuela and some hawkish comments out of Bolton yesterday about Iran. And it's great to have Kirk Spano back with us. Kirk, welcome back to the jungle, buddy. Just passed you the controls.
Happy Valentine's Day.
Oh, thank you so much. Will you be my Valentine and break crude to $48 before it goes to 68?
Yeah, man, I will. I love you, man.
Your stuff has been great. Perfect time to talk to you. It's always a good time to talk to you, Kirk. But why don't I start off with?
I have to go because I have a wife, and she's gonna think that something weird is happening here. Yeah.
All right. Well,
I'm gonna leave you to your love here.
All right. I love you.
I love you too, Coach.
Like to the marrow of my bone, man.
But in a platonic way.
Yeah. Oh yes. As soldiers, like Romans, Greek soldiers at Thermopylae.
Right.
How about that?
Yeah. I hope we don't have the same ending.
All right, Kirk. So back to business. Were you surprised by the magnitude of the decline in crude oil prices this fall with the equity markets? And now we've had a recovery here. So how did you manage that decline in crude? And what are you thinking now after this rally? Curious.
Right. So can you see my screen right now? It says fourth quarter macro and market outlook. All right.
Yeah.
So
you write a lot of great articles.
I try. I goof them up from time to time. So in this article, I basically talked about why we were going to see a fourth quarter decline, and we went into that correction heavy in cash, and we also had hedges on IWM and SPY. We sold them way too early.
Okay.
So
it's hard to be. I say it's hard. We always have too much on when we're wrong and not enough when we're right, and then we always question ourselves on exits because we would like to be perfect, but man, you can't expect perfection at the craps table. What do you think?
Yeah, no, I think you're right. Sometimes the dice go against you, and in the fourth quarter, I've been trying to explain what happened in the second half of the fourth quarter because I really thought the buybacks would kick in, but there were a couple of factors that offset that. And one of the things that I think people completely overlook is the money flow into and out of the markets. And in the fourth quarter, particularly late in the fourth quarter, we saw a record number of hedge funds liquidating on top of tax loss selling. So not only did we have the Fed pulling $50 billion a month as of October out of the markets and the economy, because most of that money does trickle into the markets from the Fed, but we also had the tax loss selling because people had gotten beat up early in the year and probably were scared and didn't make their money back. And then we had really a record number of hedge funds liquidating. So there were massive amounts of money that were flowing out of the market. And this is on top of the long-term outflows from the markets, which are driven by long-term demographics. Because now we see, if you look at Yardeni, pension funds are in decline, right? Because pension funds aren't really taking in much money anymore because young people don't have pensions. So as the older folks, as people retire, I don't want to call people old. I'm almost 50 now, and I feel like I'm rounding second base. But the pension funds are in distribution, so that is a long-term drawdown of money that would otherwise be going into markets like it did for decades. So we have
didn't they also exacerbate the problem with pension liabilities because interest rates have been so low, Kirk, that they've had to go out and do some esoteric things that may have suffered hits during the fourth quarter, the worst December since 1931.
Yeah, the pensions are in bad shape, right? So we believe that pensions are underfunded to the tune of $4 to $6 trillion, and
not enough by that insurance that we have for the pension guarantee, whatever it is.
No, we're short $4 to $6 trillion. On top of what the government's already set aside. So I mean, in fact, that led to a interview that I gave where I said that helicopter money is inevitable. There's no way to fix the pension system without just printing the money. Otherwise, you'd bankrupt everybody trying to fix it. So eventually,
you ever been to a retirement dinner for a trader? You haven't.
No.
You haven't.
Tell me about
it. No gold watches for us, buddy.
No, yeah.
So we just have to accumulate the shiny stuff. But
right.
yeah, so we have a pension crisis going on, and do you think that is the Fed still? I believe they're still, even though they have been more dovish, Powell's been more dovish, they're still moving ahead with QT. Have they lowered the amount coming off their balance sheet since Powell made the dovish speech about a month ago?
Not yet, but if there's a chink in the economy, and I don't mean that to mean Chinese, but maybe I do.
Okay, well, you know what, Kirk, maybe it's not that they're data sensitive. Maybe they're S&P sensitive. And they don't want to, they're not going to have to do anything until maybe we take out the lows of December. Then maybe they'll do that. But it seems like, just like predecessors, that they can talk hawkish when the market's making all-time highs, but after a 10-20% pullback, they pull in their horns and, they pull in their claws and put on their horns and create a bull move. So do you think the Fed is done for the year?
I do not think they'll raise interest rates before December. Well, they might raise in December, right at the end of the year, if things are going well. But I think that there's a scenario out there where you see an extension of the I've been talking about these China trade talks as a binary event. If there's a deal, you're going to see the market roar, you're going to see the economy continue. But if there is no deal, you're going to get the opposite. And, I think the highest likely scenario is that Trump takes a deal, China gets more of what they want than, Trump would like to give them, but it won't matter because Trump will say it's the greatest deal ever, and 40% of the people will believe him. So, I think there's going to be a deal with China, and I actually think that things go pretty well for the balance of this year. However, I don't have real high conviction on that because I think there's a very good chance that President Xi is so irritated with President Trump that he buys the things that he needs, soybeans, oil, gas, up on the front end. They get an extension to finish up a deal, and then they end up not finishing up the deal. And that could happen sometime over the summer. So we just have to keep an eye on China and trade, because as we know historically, if trade goes south, global GDP goes south. So we'll have to see what happens there. I wish I could give you a divine answer as to which way that would go, but I don't think it's much better than a coin flip in either direction, whether or not there's a trade deal. But we're, as traders, as investors, man, once we have that information, we better adjust quick, because negative news on trade is negative for everything.
Is it possible it turns out to buy the rumor? Because, I mean, everything floating out, Kudlow, we're making progress, Trump, things are looking good. It's not the sentiment out there. It looks like something's going to be done. Is it going to be buy the rumor, sell the fact? Because people may look at the deal and know that it was just symbolic and really didn't accomplish much, and that we're probably have more issues that could reemerge if it's just a cosmetic type of trade deal?
Maybe, but I've been working with a lot of millennials who are starting to be investors, and I've been, taking in big clients again because they've asked me, and why won't I take the money? But, I've been talking to some pretty interesting people. By the way, I'll be out in New York in March when you're there, so I'll see you then.
Oh, go see the guys. Yeah.
Yeah, but I think you could be right, but it could go another direction. I think that there is this account. I've been driving coast to coast, and I was just down in Florida. I'm telling you, this economy is huge. I mean, we have 7 million job openings and only 6 million people to fill them. And we've got 500,000 millennials, men, that won't take them. So this economy is really, really strong, and it's going to take a lot to break it. I'm not saying that it can't be broken, but it's going to take a lot to break it. I think people are underestimating it. And, from the bottom up, the economy is doing better. Now, how does that impact the markets? Hard to say. Again, there's drawdowns coming out of the markets because of the retirement situation, and the millennials don't have the money to offset, to put in and offset what the boomers are taking out. So we have to look at those ebbs and flows, and that's where the technical trading comes in. I use money flows. I'm a big Chaikin money flow guy, and a little bit of MACD, but really I watch money flows because it's just supply and demand, right? And I've talked about this Powell put. I think it's a lot lower than people think. I think that he's more concerned about the economy. I think he's very straightforward when he says that. But I don't think he's immune to supporting the stock market. But he's certainly not going to support it the way that, Janet Yellen did when she said, hey, it's good for America for people to have money in their 401k. Powell doesn't quite see it that way. He leans in that Austrian direction, whereas, Bernanke and Yellen were definitely, very Keynesian. So you have to understand the different philosophies of the players. So while there is a Powell put, it is not nearly as strong as Yellen and Bernanke. And I think that we have to be careful of all these things. I think this is the least certainty that I've seen in a very long time, a decade for sure, right? So, I did a whole piece on where we are now in the markets on my YouTube page, and you can get a deeper view there. If you wanted to talk currencies, which I know that you guys do, I way back in 2000.
Yeah, you've been a dollar bull for a long time, Kirk.
Very, very long time. And I think that given that we are the cleanest dirty shirts, right? Our retirement demographics and problems aren't nearly as bad as Japan, China, or Europe. Our obligations are more fully funded. And ultimately, I think that the United States becomes because remember, supply chains are moving. So ultimately, it's going to come down to the strength of currencies, who's got the strongest standard of living. I believe that the United States is going to become a giant Switzerland, except that we'll produce things. And in particular, for the next 50 years, we'll be selling natural gas and food. So
I wanted to get to that, Kirk, because NG Natty's pretty cheap right now. Yep. And I've seen some long-term cyclic work that point towards, in the next year or so, astronomical nat gas prices, probably dependent upon us being able to export to Europe. And, the spread would narrow between what they pay over there and what it costs here. And I was wondering what kind of candidates you might have. I know you made a great play in Chesapeake last year. They have some issues. I'm wondering if you still like that or what you're looking at for nat gas going forward.
Well, as you may have noticed in the tabs, I do have something teed up for you at the end.
Oh, okay. All right.
But, so
hey, no mulligans, man.
No No mulligans. Yeah, that Chesapeake trade was awesome, and because with the options that we used, it was a 40% move in the stock, so the options were up to 300%.
Yeah.
That's a good trade. I think that there's a lot of value in the oil space. If you take a look at the comparison charts, and I don't have one up right now, but if you take a look, energy is clearly where the value is. And I have an article going out. Yeah, I would like to get it out today, but I got to take Grandma to bridge, and then I got the girlfriend, so I'm not really sure how this is going to happen. But I think that the value in energy is very simple. You want to find companies with good rock, right? They have good acreage, right, and they have good balance sheets.
Yeah, not a lot of debt.
Right. So that knocks out 75% of the companies, because some of the good balance sheet companies have bad rock, and some of the good rock companies have bad balance sheets, and they'll get taken over. So, and they won't get taken over with big premiums, because their balance sheets are bad.
They're more or less being rescued.
Right. So you have these
bought up for the assets, not the company.
Right. You have these mergers where it creates economies of scale. They get all kinds of synergies, but it's necessary, right? It's necessary because their debt's so high that even if they get a decade of profitability, it would never pay off the debt. And then what happens in 10 or 15 years when oil demand falls? Then they're in big trouble. So, let's keep telling the story. Going way back to 2014, 2011 and 12, I called the shale boom. 2012 to 2014, I was talking about how the dollar would be strong, why it was going to remain the reserve currency for all the way through my children's lifetime, and people didn't want to hear it. And yet the dollar went on this big bull market, had the little pullback, and now it's getting strong again. Will it pull back? Sure. But in general, the dollar is going to stay very strong for a very long time. And, you hear the criticism, well, the petrodollar is almost over with. Kinda. The petrodollar, based on Saudi Arabia requiring dollars to be used in oil trades, is probably getting close to being over. But the fact that we export oil now, so we're replacing that. I have a chart up on that too. So, there's big growth coming because the United States, in an era of massive technological change, moving supply chains, in an era where the middle class of the planet won't grow as fast, in an era of climate change. And I know that some people don't want to hear about that. I don't care. The world's changing. Whether we're causing it or not doesn't matter anymore. The fact is that the climate's changing, and farmland is becoming difficult all over the planet, and we still have some of the best farmland. We have the resources to irrigate, and then now we're an energy exporter. So there's big growth coming in the United States, because imagine water, food, energy are necessities. People can't do without those. And if we sell them food, water, energy with strong dollars, right, we're getting a whole lot of value for what we're going to sell. So even though we won't export as many cars or we won't export as many widgets, it doesn't matter, because those supply chains are moving anyway. We're going to supply a lot of raw materials. And as investors, we should be looking for the countries that can do that. If the oligarchs in Russia ever stop pilfering that country, Russia could become an amazing investment. But they're just going to keep stealing as long as the people let them. So we should keep a look on those big trends, and we need to understand that with oil, because we want to talk about oil here, is that there is a developing balance between oil supply and demand that will last a pretty long time. And I started talking about that way back in 2014 when I was telling people to get out of, this is the article where I told people to get out of oil investments, 3 or 4 months before Saudi Arabia did what they did. So I have a whole series you can take a look at, peak oil. Just put in peak oil plateau and you'll find these articles. I think we're getting to the point where the Goldilocks moment for oil is almost here. I talked about it a year ago, probably right before I was on here. And I talked about how $80 a barrel oil seemed to be that Goldilocks price. You know, maybe it's 70. I don't know. Maybe it's 90.
Well, we got there after you talked about it. We got to 75.
Yeah,
we got
right. We got almost
it couldn't hold it.
Right.
Yeah.
And the reason it couldn't hold it is because Saudi Arabia and Russia increased production at the behest of President Trump. President Trump ended up lightening the sanctions on Iran. I don't think those sanctions are ever going to get tougher than they are right now. So, you know, and then you have the Europeans who are figuring out ways to go around it. The Chinese are going around it. So Iran,
you know, you bring Iran up, and we've talked about it a lot in our past interviews. Is any type of intervention, military intervention, off the table with Iran because Venezuela is a softer target?
That's one way to look at it, right?
That's the way I look at it. I mean, look, you know, just like the Gulf War, the Iraq War, you know, the axis of evil, that was the easiest target.
Well,
but, you know, North Korea would have been a tougher target than Iraq back then.
Okay, so let's unpeel a couple layers of onion. You take a look at the U.S. refining system. What do we need? What do we have versus what we need? We have lots of light sweet crude. What we need is some heavier stuff to mix it with. Just because you can't rebuild all these refineries quickly, and why would you stick money into new refineries when, you know, 20 years from now you probably won't need half of them? You know, so
Venezuela is the sour.
Yeah, they got the heavy stuff, and I think that you're going to see Exxon and Chevron back in there in the next year or two. We'll see what happens to Maduro, but
yeah, well they'll be fighting Russian and Chinese oil contractors in there.
Yeah, and why not get militarily involved with a South American country that'll love you for it? You know, instead of building a pipeline from Canada. I mean, gee whiz, a pipeline from Canada, that's a horrible idea when we can go to a war and occupy a country.
Yeah, okay. So you don't think it's that far-fetched?
I don't think it's that far-fetched, but I think that by 2021, the powers that be will not be the powers that be. So I think that probably you see a whole different mindset. And while there's going to be constant pressure on pipelines, the fact is that we need a few more. And why wouldn't we be nice to Canada? You know, I think it takes an idiotic mind to not treat Canada as a very valued ally.
Yeah, they've been in the trenches with us in every war we've been involved in.
Yeah, you know, it's
every war.
Yeah, no, look, man, I'm not gonna. I know people love some people love President Trump. I'm just saying that it doesn't make sense tactically.
And they make Moosehead beer too.
Yeah, they do,
and Crown Royal.
Yeah, and they guard the border with pylons, and that's nice.
Yeah.
And so anyway, here this is important because we're right on top of it. So the Saudis have dramatically cut production and exports. Canada has cut production to bring their inventory down, and we're starting to see inventories right here
tighten up.
Starting to see inventories tighten up. So what was it? There was a API last night. Just gave a surprise drawdown. We'll see what EIA does. That's coming up. But the bottom line across all this is that there's going to be a balance between supply and demand. It doesn't matter if the senators pass NOPEC, right? They can pass NOPEC all they want. They're 20 years too late. So with the United States being where we're at on oil production, with Saudi Arabia asserting itself a couple of weeks ago saying, look, we're going to control this market. We're going to be the last one standing. Deal with it. I mean, they told us. They said something that I said 2.5 years ago on Market Watch that they would eventually say. It took a lot longer than I thought. But Saudi Arabia finally said a couple of weeks ago, hey, we're going to be the last man standing. Just get out of our way. And if you try to compete with us, we'll crush you. They came out and said it finally. So they want oil in that $70 to $90 range. I think that's going to be the range. Probably closer to the bottom end, except when there's a hot economy or tension. But, you know, you could see spikes. If there is actually a war in Iran, and I still think there will be a war in Iran, I think it'll have a lot more to do with the Israelis getting irritated and with some sort of counter-revolution over there. But, you know, who knows when that'll happen. The Ayatollah has to die sometime, right? So whenever we hear that he's on his deathbed, get ready. So all told, the United States, and I wrote my first Freedom from OPEC article back in 2012, that it was going to come by 2019. So in 2012, I said 2019, based on my models, plus or minus a year, it's going to be the year that we are free from OPEC. What happened very late in 2018? We had a touch of that, pulled back a little bit. By the end of this year, once those Permian pipelines come on, we won't need OPEC anymore. We'll still trade with them a little bit, but it's going to be more of a diplomatic thing than, hey, we need your oil. So,
well, that is a major paradigm shift, considering, you know, all the aggravation and blood and treasure that's been spent over there for that reason. That right. We no longer have that reason. So, yeah, that, you know, that is a great reason to be optimistic about our country. So,
it's why the dollar will stay very strong.
Okay. So a lot of people think that the dollar being too strong is going to be a problem for a lot of markets. They're deflationists. The difference between you is we could have a strong dollar and still have bull markets in certain asset classes like equities, even though we have a strong dollar. Is that correct?
It'll be certain things, right? So I wrote an article telling people to get rid of grandpa stocks, and I have actually, you know, if you want to get
a new website, Bluemont Asset Management?
I did. I rebuilt my website because I've been an oil guy since the 90s. And normally when you're an oil guy, right? But to me, I've been waiting for this day for a very long time. We are on the cusp within a couple of 2 to 6 years. We're within 2 to 6 years, depending on how elections go, of a major paradigm shift with energy policy. And that's why I don't think the United States is going to make all that much money on oil, because it's not going to be a 20, 30, 40, 50-year thing. It's going to be about a 10-year thing. And we're going to get about 10 years here where we prepare for this whole change, right? This whole combating of climate change. I'm so convinced of this that I changed the nature of my firm. And you
know that I've interviewed and read some people that have the exact opposite view based upon sun cycles and sun activity, that they say we're entering a period of global cooling that could be like a mini ice age like we had many years ago.
So,
what do you think about that? Is that crazy?
I've studied that extensively. You know, and remember, I was a science guy in college.
All right.
We're gonna get we're at the bottom of 2 solar cycles, or we're entering the bottom of 2 solar cycles. However, because we're retaining so much heat, all it will do is be a short-term offset at the bottom of the mini solar cycle. So will we get several cold winters? I think so. I'm in Wisconsin, and I can tell you, I did not want to go outside for part of January. But the reality is that has nothing to do with climate change, right? That is just a normal part of the cycle. The normal part of the cycle you cannot change. Right. But there's other parts of this.
Okay.
We're changing the whole CO2 and methane structure of the atmosphere, and you know, we are potentially, you know, this mini ice age might buy us some time, right? And it's not going to be like the mini ice age when we wiped out half of the people and trees on the planet. So the last mini ice age was also man impacted. Very largely man impacted. That was just in Nature, I believe Nature magazine. So, you know, you can talk about the solar cycle, but when you take a look at it over millenniums, you realize, well, there is a natural range, and we're probably moving to the cooler end of the natural range, but then there's the offset for what we're doing to, to the climate. So what happens in 20 or 30 years if we haven't used this time period to fix things? Well, I could tell you it's a 4-letter word that starts with an F and ends with uct. We're in big trouble for our children and grandchildren if we don't take the next couple decades to fix things. And so that means weaning ourselves off of fossil fuels. That means finding alternative energy. Solar, I don't understand what people don't understand about solar. You don't use a lot of solar panels to provide energy for the whole world. If you put I believe it's 2-mile by 2-mile solar plant in the Sahara Desert and ran a wire to Europe, you could power Europe with it. So it's not like you got to cover everything with solar panels like some of these guys say. But the change will be slow. It'll be rocky. We're still in the old paradigm. We're at the cusp of change. And how long does that change take? I don't know. But I will tell you, as traders, if you can clear your mind of ideology and stick with your technical indicators and understand that there's going to be some amazing swing trading opportunities and position trading opportunities, you're going to make a lot of money. So, if you want to follow anything I'm doing, this is the website to come to. Just Blue Mound AM. I've got all the links out. You want webinars, you want articles, you want to follow me on any of these places. All the links are here. So just bluemoundam.com, and you can find me. And that doesn't mean that I'm going to be right about everything, but, I've had a pretty good track record, and people are starting to call me a futurist. I don't even know what that means. I'm just trying, what I'm trying to do? I saw a cartoon when I was early in my career, and it was a client talking to a broker. And you know what he said? He says, "Tell me what I'm going to wish I had bought 5 years from now."
Yeah.
Right? 5 years in the future, tell me what I would have wished I would have bought today. And that's all I'm trying to do is, what would I would have liked to buy today if I knew what I'm going to know in 5 or 10 years?
Yeah, if you had a newspaper.
Yeah,
5 years in the future. Yeah.
Right. But you guys are traders.
How about 6 months here? 6 months with the energy. You said you had a slide teed up. Why don't we get to what really everyone it's all about making money now, Kirk.
Right.
What are some of your ideas with this recent recovery and possibly natural gas? I think natural gas will be phased out just like all the other fossil fuels because it is cleaner burning.
Yeah. So natural gas is going to be around a very long time for 2 reasons. One, it pollutes half as much as coal.
Right.
So a lot of coal is about to get replaced by natural gas. I mean, we already know that's happening. But there is a technology now for methane and CO2 capture that will turn that into plastic. So we can put this technology on farms. We can put it at waste treatment facilities, at dumps, and at natural gas power plants. So this new technology, which Coca-Cola and some really big petrochemical companies or one really big petrochemical company are already using to create plastic. Right? If you drink a bottle of Coca-Cola, that bottle may have already come from a non-oil-based petrochemical. So that technology, which is why I know there's a lot of people who are real high on petrochemical investment right now. Not me, man. I'm going to be selling that and shorting it soon because petrochemicals are in big, big trouble from this new technology that has massive investors. Check out New Light Technologies down in California. And if you figure out a backdoor way to invest in them, let me know. Because I think it's going to be a super unicorn. I mean, just check it out. But natural gas is going to be around because technology like that, and somebody will copy it and make something similar, is going to be able to make natural gas almost emission-free. So natural gas will be around a very long time. Encana is my Chesapeake of this year. I think that Encana is dramatically undervalued. I think that people are completely underselling the merger with Newfield Exploration. I think the analysts have this one wrong. Frankly, I think we know that the analysts are usually wrong, and they're really wrong on this one. Encana is going to be one of the 3 or 4 premier unconventional shale oil and gas producers in North America going forward.
I still follow that one.
Yeah, and they went all the way up to where I said they would, and now they crashed all the way back down with the fourth quarter sell-off. Yeah. These guys have 3 premier assets. The rest of these assets are probably going to get sold. So Williston might get, their Bakken assets might get sold to Continental or Chevron or Conoco, whoever. They're going to sell off all these assets to other players who can bolt them on, because all this consolidation in the industry is necessary, like we talked about. And now you're going to have a company like Encana that has massive assets, Montney, Permian, Anadarko, natural gas, oil. And they are going to have these huge pieces of cash dropping to the bottom line. These guys are already reducing debt. They're already buying back shares, and they're already paying a dividend. I think that this stock can go all the way back to its highs this year, right? So all the way back up to like 14.
Again? 14, yeah, and it left a gap on the way down. Was that the acquisition that people didn't like when they hammered it?
I don't know if that was the acquisition or if that was just Q4. I mean, they coincided, right? So the acquisition was November, and the market fell apart the whole quarter. Okay. So, it could have been both. I think by date it was probably the acquisition, but the whole quarter sucked. So this company is going to have literally a couple $2 billion drop to the bottom line as they sell off these assets. I think you're going to see oil continue to go up towards that 80 again. Do we get there? I don't know. It depends on the trade deal. But this is the company where I think if you want to make a trade, go take a look at your technical indicators now. There was a little retrace after a little bit of a head, started to get rolling, a little bit of retrace. And I think that these guys are in that spot where you can start taking positions. And if you use the right
member of our community, options on Encana. Someone in our community wants your view on Oxy.
Occidental Petroleum. So they're my favorite dividend-paying oil stock. They are big in the Permian. The article that I'm writing is going to talk about only invest in companies that have significant Permian operations. Well, Occidental is second or third biggest Permian producer, and they also have a carbon capture, a carbon mitigation business, and that's going to be a very big deal in the future. They were smart enough to sell off their export facility at probably the high-ended price. I think that their management might be the best in the industry, to be honest with you. And that's the stock that I tell people, sell Exxon and Chevron, because they're just never, ever going to get to debt-free, and those companies have to break up at some point. Occidental is the one that I say, look, if you want dividends from the oil patch, buy Occidental. Not a real big growth company. I mean, could it go back to 100, 120 at some point? Maybe. But I think it's a company that you buy as a steady Eddie portfolio anchor.
Okay. Got it. All right. Anything you want to wrap it with? Another great conversation with you, Kirk?
No, I get so much out of listening to your interviews. I tell you what, the copper and gold that you guys were talking about earlier today, I think the gold is a range-bound asset. I don't think it goes much higher or much lower, but it's it's a fun one to trade for sure, right? Yeah. Because you don't ever have real big risk, and every now and then you get a pop. Copper though is the one I've been watching, and I think that with the 5G world coming, with the IoT expanding, with the new batteries for cars. I mean, I don't know if everybody's aware of this, but the new battery technology is copper-based, instead of lithium.
The lithium. Okay, so they're moving away from lithium to copper. Interesting.
Right, because lithium is toxic and expensive. Copper, you know, is easier to get. There's a lot more of it, and it's non-toxic. So,
how are you going to play it with things like Freeport, or you have some other ideas?
Freeport's the one I was just looking at, but you know, you have to take a look at some of these South American countries that have gotten the snot kicked out of them, and hope that you can buy them cheap, and that the countries don't screw them up. Right, so because those stocks have so much upside, but you do have
political risk.
Yeah, you have a lot of risk.
Yeah,
so,
they could nationalize them. There could be all kinds of problems there. So, is Freeport anything?
Small bites on those foreign companies. Small bites.
I think there was one COPX. Isn't that a copper stock? I forgot what it's called. Or CO.
It sounds like a fund, but I'm not positive.
Oh, okay. All right. Yeah. So you bullish copper, and you're still doing the research to filter out candidates for that.
Yeah, Freeport McMoran is the one I've traded a lot in my career. I mean, all the way back to the 90s. It's been a long time. I think it was called something else when I started. But was that pre-merger? I'm not even positive. But Occidental I've traded since 1999 too. Okay. So I love Occidental. They've been through some phases. They sold a lot of foreign assets. I think that's a company, like I said, that's a core holding for people who aren't going to trade much. But Freeport, you've seen some of the massive moves in Freeport over the years.
Yeah.
We might be on the verge of another one. We have to try to figure out where the buy point is, right?
Okay. That's the art of it.
Right.
It's not the if, it's the when.
Right. And so a lot of what I tell you comes from Warren Buffett saying, I can tell you what's going to happen. I just might not be able to tell you when. And that's the hard part, and that's that's the hard part. I watch what you guys do. I pull up these videos on the weekend, and I'm just like, huh. And they got another one right.
Yeah.
So,
thank you, Kirk. It's the best team. Very good team. Very good team. So, are you a subscriber?
I'm not, because I don't do any of the kind of trading you do.
Oh, okay. All right. Well,
I don't need it. I don't need it in real time.
All right. Well, Kirk, thank you so much for coming here and once again edifying the F.A.C.E community on your views macro with some, shorter term stuff for us to consider. And I encourage people to follow Kirk on Twitter. He's very insightful. He's a futurist now. And you can find him at Kirk Spano, and his website, Blue Mount Asset Management.
Yeah, BlueMountAM.com for short.
Okay. So, Kirk, good hunting, my trading warrior brother. Thank you so much for hanging out with us again today, and great conversation.
Yeah, always love being on.
Okay, well, we'll get back together sometime in the spring, see what's happening, and you can update us on, any new developments that you see occurring here. Okay, buddy?
And I will definitely stop by and visit you at the Traders Expo in New York on, March 10th? 11th?
I think 10th through 12th. Yeah, I'm not going to be there, but most of the crew will be.
Okay.
So, it'd be nice for you to meet Steve, and Greg is coming in from Europe, Steve from Greece, and Joe Perry, who lives on the East Coast. So, are you a speaker there? You're just going...
I'm just visiting, and I invited my girlfriend so we can go see Harry Potter. But okay. So Joe Perry, the guitarist, is that who?
No, he's not from Journey. He's just on a journey with us here at ForexAnalytix. All right, bro.
All right. Take it easy. Happy Valentine's Day. Buy somebody something nice and say something sweet.
Okay. Thank you, Kirk.
Take care.
It was great talking to you, buddy. Adios.
Bye-bye.
All right, F.A.C.E, that's a wrap. Remember, don't just count your pips, count your blessings. In members chat, this interview is recorded and will be out on Twitter in a few hours. So see everyone for wrap-up TGIF session tomorrow. Adios. Thanks again, Kirk.